What's up guys, Steven Dexter. So today I'm going to share 5 golden tips I wish I've known since the beginning. Doing this type of videos is to help beginners to find the correct way to start a trading career. So before I start this video, make sure to hit the like button. And if you have further more questions after this video, make sure to follow my Instagram and Twitter. And let's get started. At the very beginning of my trading career, I started with about a couple $100 doing with all those ETF, and because I realized there's a certain range on ETFs bouncing back and forth. So I was trying to buy the low and sell high and short the highs and buy low. So in the long run, the stock didn't really follow the specific range I was really expecting. Turned out I wasn't very profitable, but I was barely profitable. So I was making 20 and 30 bucks per trade. And after I realized that I can't really stick in front of the computer and waiting for those dips and high to happen. So each trade I would be making about sometimes even negative. So like negative 100 bucks, sometimes I make 50 bucks. So by end of the month, I was making like 500 per month. Since I was looking for a little bit more heavy growth, so that's why I get into the penny stocks. So penny stocks, a lot of people think it's a scam. In the long run, yes, it is a scam. Penny stock, it is a scam. It's because when you're trying to buy into these penny stocks, when you're holding them for a long term, 99% of the stocks drop to zero. So that's why the raw edge of people trying to buy in stocks, and you can use this edge to short into a ticker and expecting it to go to zero. So shorting is you're selling high and buy low. That means if the stock drops, then you can make money. It's the opposite way of buying. So number one tips, you have to save money, because most of the US based broker, you have to have 25,000 to start an account, is because you can have that amount of money to avoid pattern day trader rule, which is called PDT. Some of the broker like Trade Zero, Spring Trader, if you have international accounts, then you can start with under 25,000 and you don't really have the PDT rule, which is only US citizen or US residents. You can only trade about 4 times per week. If you have problem with the starting funds, I was just starting with a really low amount. You can be under PDT because you don't really need to overtrade. At the beginning of my trading career, I always overtrade. I trade about 14 times per day. And by the end of the day, I pay too much in commissions. So if you're just getting into this trading career, I wouldn't really recommend trading that much. Stay under PDT at least for a couple months or 6 months. Then it should help you to rediscover the edge or start tracking statistics to find where your niche is supposed to be. Tip number 2 is a lot of people, when they're looking at other people making money, they're making 50,000 per trade, they're making 160,000 per month, or making like $500,000 a month. And none of this really matters to you. You're just a beginner. Okay. When you are looking at this industry and you see a bunch of money that people are making, and if you want to jump into this full time, I wouldn't really recommend it, because some of my students that they think trading is very easy. I think if people can do it within a couple of weeks, I can do it within even faster. So when they try to jump into a trading with full time, especially when you're jumping into a full time, you are basically have no job. You have a desire of making money. It's because you are not comfortable. Every time when you go into a stock market, you feel like you should make money in that day. And in that type of thoughts will forces you to make emotional trades or trades that it's not even your strategy. And in terms of that, you will end up losing money. So at the very beginning of your trading career, I would really suggest going part-time. You have a partial income, at least in your life, to support paying the bills and stuff like that. Then you're more comfortable to diversify your income and trying to make more income in your life. So at that situation, you won't be so uncomfortable that you should go into the market today and need to make money right away. So tip number 3, you should build up your backup funds, because we're all human. We always make mistakes. We're not machine. We don't, even though machines sometimes get glitched. I always tend to build backup funds. That means when I make a profit that I feel very comfortable with, and a lot of people will think, okay, well, I can use this profit to make more money. In stock market, that's completely wrong. Wrong. It's because when you are building a strategy at the very beginning, and you're thinking, okay, well, I grow 25,000 account into a $50,000 account, then the next thought, I can use this 25,000 profit to put into another investment or put into another trade to make another $50,000 trade. In this case, your mindset are completely wrong, because in trading, it's more direct with money. So you need to build up your backup funds. For example, if you have account 1 and account 2 and account 3, Count 1 will be 25,000, count 2 will be 25,000, count 3 will be 25,000. So you have 3 opportunities to make, let's say, a huge mistake to blow up your account. And at the very beginning, your trading career, you should focus on a couple of strategies. So when you are using these backup funds, that if you made a mistake, you can still come back. And for a lot of trading day traders that they go into the market and they made the first big money, then they just go all in with the next trade.
I'll see you.
That's how they lose everything. That's how they can't get up and they can't go into a trading career anymore because they have no more funds. So I would suggest give yourself a couple opportunities to be comfortable in this market. And that's how I do it. And I feel much more comfortable with building up backup account. I even have about 2 to 3 backup accounts I don't really use. If I make a huge mistake, I can still have the chance to come back because the strategy works really well based on statistics. So number 4 tips, when you get into stock market, when you're looking for strategies, always test yourself, always simulate the gains of the year. Let's say the first, when you want to track a strategy, you want to track how frequent it happens. So the frequency. Number 2 is, so how much is the risk reward? Because you need the risk reward to make money. So once you find the frequency, once you find what's the risk reward, you can use them times together and to make the simulate again. Because we can't get the perfect entry, we can't get the perfect exit, then the simulated gain will be like, let's say 20% less. So a lot of people go into other programs and they're learning strategies and they don't even know the strategy actually worked because they never had any samples. When you are buying programs or buying other people's program, always go in and test their strategies. Test. It's very important. It's because if you go in using a strategy and you're expecting for long-term gains and by the end of the day, you didn't really test your strategy, you don't have the sample, then you did it for, let's say, 50 times, then you realize, okay, well, this strategy doesn't work anymore and it didn't really work at the beginning. At that time, you already lost enough funds, you can't really get it back. So before you put any funds into, I would say, any market, either real estate or stock market, always test them before you try to go in. At the very beginning of my career, I didn't really test the strategies. I figured it out after 1 year. At the beginning, I was tracking too many strategies. So those strategies I found is to observe the stock market and trying to test by observing, not putting on actual data sheets. Then I see they work again and again. So that's why I stayed very profitable at the very first year. So number 5 tips, always be creative. So number 5 tips, always be creative, because when you don't have the desire to make money on that day, that you are forced to make money because you need to pay your bills and stuff like that, you will eliminate your creativeness. You will eliminate your creativity. Always think outside the box and try to think, okay, what happens if I put this piece and this piece together? That's the reason I track statistics, is because I can put 2 statistical patterns together and to make sure, okay, well, those type of patterns can combine together to get a better winning percentage or better risk reward. So that'll be the end of this video. If you have any more questions, please leave a comment below or follow me on Instagram or Twitter. You can leave a question there. I can always answer you in DMs as well. Thank you very much. I will see you guys next time.